Hello, Warriors. Good turnaround Tuesday. AJ, how are you? Sinatra, Onawab, Richard, got a new computer instead of complaining about it. What do you
Good
think?
morning, Dale.
Oh, he is. Hey, good morning. Good morning,
Good morning,
Dale.
guys. And Kman, welcome back, buddy.
Thank you very much. Good to be back.
Hope you had a nice trip and recharge. Want to start off with the VIX here. So last week, before we took out this low, talked about a 3 drive setting up. So we made new lows. You're not late. In fact, I'll fill you guys in, although I do take shots before I get the signal. Do what I say, not what I do. You need a blue candle would be your signal. So if we have that today, that's your signal, even though the divergences was down here. And then you just risk the lowest candle on a closing basis. So this could be the first day that we're getting a buy signal in VIX. And the way it looks to me is if we start getting through 24 and 26, and maybe it's got a shot to make a move up to into the 30s. So we'll see. S&Ps are down pretty good, but everything can change in a New York minute on the Fed. Tomorrow I noticed that Euro is right against some pretty important resistance, and the 200 on the 4-hour. So we wanted to see how markets would react with the little sell-off. Well, in equities, and we had a little one yesterday, and it didn't have much effect. And S&Ps are down 23 right now, and the Euro's up 32. So, so far, it's holding up pretty good. But we're talking about maybe 3,900 in the S&Ps. So, as pressure mounts, maybe that'll change. What else here? When the ask came in, I know that I think you left on your vacation before we really had the big slaughter in the yen, and now we're back up against some resistance, 61.8, a moving average coming in at about the 136 level. Do you believe that the trend has changed with this break that we recently had? It was a lot different than this break. Remember, we talked about at first it was similar, but it really accelerated all the way down here.
Yeah.
Do you know what was behind it? Was it quiet type of intervention that no one talked about?
Yeah, well, there was. I was looking at it. Yeah, I left it at around. I had the first leg down there at the end of July, and I left it around 133 and a half ish.
Yeah.
I think then we had a quick move down since the US yields were and the yields everywhere were coming off.
Right.
On a bit of a scare there in the second into the 2nd of August, but then the yield started to jump, and I was talking about it in the flow show as well. When I look around at how emerging markets have performed on the other side, I think there's a lot of and the higher yielders. I think there's a lot of the carry trades are still back. They were probably waiting, and then once the yields turned. It seems like, okay, dollar yen shot up because that's the main instrument, but then carry trades are looking to be back in force as well.
Better.
Yeah,
and that implies a weakening dollar.
And that implies a weakening dollar versus the higher yielders, but also a stronger dollar versus stuff like the yen, right? We had this breakdown when as you're on there on the 10-year. With this breakdown from the 270s, then went for a quick look down in the low 250s, and then the subsequent rally coincides completely with the rally in the dollar yen, right? And all
sure does.
Yens.
So I'm thinking maybe yields could get back up to 3%. That's going to be tough for them at this 50-day moving.
Well,
So
tomorrow we get CPI, right? So
tomorrow is the most important day in the market since the panic
Since
of
the last one.
1911.
Since the last one.
Yeah, since
It's the most important. It is the most important day of the rest of your life. Tomorrow.
Yeah, remember you would describe the market and you would say today's a very critical day, and then I started to notice that there are a lot of critical days. You know, I guess every day is critical when you're speculating, right? So
Huge, as they say.
yeah, so I mean the metals just completely, you know, exploded here, especially yesterday, and the gold silver ratio that Stel was talking about gave back this whole recovery in basically a day. So you know that looks pretty heavy.
You know, we were talking about that with Stelios on the flow chart as well, as Stelios is also involved, same as me in silver. And my little worry with going too heavy into those metals right now is that there's in the Biden how do you call it, the reform whatever,
The Inflation Reduction Act.
yeah, the Inflation Reduction Act. There's nothing about infrastructure. If there would have been infrastructure taken up in there, it would have been, first of all, much bigger. But if that would have been in there, I think silver would really be ready to go a lot higher.
You don't think it's enough with all the use in solar panels?
Well, I mean, it's
because it's already in deficit, right? I mean, silver supplies, at least I've heard for years, have been in deficit.
Yeah, and everything green, everything climate, everything new, as Stelios was saying this morning, is
silver,
is more use of silver.
Silver and copper. Any gold? Any platinum? I guess platinum's leading the way out of here, or palladium. I don't know if you guys follow it, but that was something Goodburn said, that he, in terms of performance, palladium was going to be the top performer, then platinum, then silver, then gold, then copper. So in terms of relative strength rankings, that's what he thought. So buy some palladium. I don't know where you could find it. Maybe Putin will mail you some. So what are you guys thinking with the European currencies? You know, pound, you know, came out of this wedge. Yeah, drachma, you're going to be going back to use, but don't you think the euro's acting stubborn, or is, you know, that it's not giving anything back, and yields are starting to climb today again? So
yeah, the euro is still trying to hang in there. Again, we go back to tomorrow's CPI, which could move things a lot, but it is hanging in there. And the more it trades around this 101, 102.5 range, the more it will feel like it's basing. But I think it's way too early to make any decisions right now. I remain of the view that the pound should be a sell the rally mode. I mean, I find very little to be positive on the pound. And talking about the pound, I don't know if you saw Liz Truss, you know, one of the two candidates for the next conservative leader, along with Rishi Sunak. She said that, you know, we should rethink the 2% inflation target that the Bank of England because inflation, the main cause of inflation is money supply. And we should be looking at that. And I'm like, wow, somebody actually said it. Obviously, she got a lot of criticism for saying that, but it's actually true. You know, it's that's the main source of inflation is ever increasing money supply. The problem is, how can you control that when you're running deficits every single year? You can't. But it's just interesting that a major politician who could be and is likely to be the next UK Prime Minister actually went out and said that, which is like a taboo thing to say.
Yeah, because that would be putting the responsibility on the central bank.
Exactly. Yeah. Central banks can do no wrong, right? And this would
Yeah.
be contradicting that. Anyway.
Okay.
Yeah.
EG still, I mean, I thought we were going to get down to this 78.6 level. That's where
Yeah,
it looks like one
83.
of, yeah.
83 would be a nice level. I don't know if we're going to get there. We still, there's a chance, but I'm still bullish on this pair. For the next few months, I think it's going to get up to higher levels. I know I've said that in the past, but I think the euro is going to start outperforming, and I know not for a long-term trade. I mean that I think in the short term we might do that, and again I don't like the pound at the moment.
Okay. All right. So maybe what happens tomorrow might either give us a chance to buy it at this 78.6 level, or just
or
have
it's
to
going to run
hold
away.
your nose.
Yeah.
Just have to hold your nose and buy it. So the performance in Aussie has been excellent, but could we make another trip down here to this wedge line? Look how many hits we've had. This was it breaking out and testing the wedge line, testing it. I would think that maybe not, that even if the dollar pops, and you're thinking what on a dollar pops, Stel, to what kind of level? 107, 107 and a half, if we got one.
Yeah, we'll need to get
Back
above those highs at 106.60 to get the Aussie, to squeeze, and to perhaps get the Aussie to get to that trend line. But really, we're going to need a really, really strong CPI number for us to get anywhere near that. Or obviously, or some kind of major event that causes risk off, which means that the dollar is going to get bought as a reflex action. It always does.
Yeah, that's a pretty good pivot right there. So drew it in for you guys. One thing I do want to point out that really did happen yesterday, that you had, the S&Ps were down 4 at one point. They were down, more than that. And I've been talking about the Russell and why the Russell would outperform. But, even with the market down, the Russell just, had another great update. Not great, but it was still higher compared to what happened in S&P. So it continues to outperform. I actually heard some analysts on CNBC who like some, and her point was that they're already priced for recession. They were down here, and the PEs are like 12 average on Russell compared to 18 on the S&Ps. So she's saying that Russell already discounted the recession with their PEs, and the bigger stocks haven't yet. So that's why she, favored the Russell. Thinks that's where, and she was cautious the market. So it's not like she didn't think the market could go down, but her preferred sector on a correction were these kinds of stocks.
Well, technically, it's the one index that's actually making a higher high, and
there you
none
go.
of the other ones are. So
yeah.
And good morning, Dale.
There you go. Good morning, buddy.
And good morning.
You want to take over my TV and
morning, Blake.
Show us what you got. Yeah.
First of all, I'd like to welcome back Kman. Kman, we've missed you, man. It's nice to have you back. I have to also say that today in this world is a one little less special place now with the passing of Olivia Newton-John. I'll say that she was probably like the second love of my life. Yeah. After Carrie Fisher, when I saw her on Star Wars for the very first time in 1977 on the big screen. Then after that, I saw Olivia Newton-John in Grease, and I think I stopped loving Carrie Fisher for Olivia Newton-John. So it's a less special.
Thank God your taste got better before you got married.
I guess they did. Anyway, it was sad day yesterday.
She was a happy woman.
But she's been fighting cancer for almost 30 years or 30 years. I think. Yeah,
it's always lurking once you've had it.
Yeah.
You'll have to learn to live with the uncertainty, kind of like trading.
Well,
Only bigger
right.
stakes.
Bigger stakes for sure. Well, Dale, you are a cancer survivor, so you of all people can speak to that.
Yeah, I'll take another 24 years.
Hey, you know
she
what?
extended at 30. That's really what a warrior.
She is badass, right?
Yeah.
Yeah. So anyway, Richard's like, I liked one of her songs. Xanadu, for crying out loud.
Yeah.
Right, Stel?
Yeah.
Oh yeah,
Best.
big.
The best.
Yeah.
Anyway,
big crush on her for years and years.
You too,
oh my
Stel?
gosh,
Of course. Of course.
Stel
You and
just
Blake
wanted to
could
get
duke
physical.
it out over her.
Sorry, it's bad this morning. Hey, so Kman, are you still here?
I'm still here.
He went back on vacation already.
I know he's like I'm checking out of this mess.
I need a holiday after my holiday. I certainly need a diet.
Oh yeah, aren't you always after a holiday? I'm sure. Well, hey, I wanted to point out a few things in the markets. First of all, the euro. You can see how important we talked about this. Well, actually, we didn't do it here on F.A.C.E. We did it on
nice
with the Morning Edge yesterday in the daily roundup in the ForexAnalytix community. But you can see we talked about this triangle yesterday, and obviously the market was looking at it too, because soon as we broke that resistance, you could see that scream higher on an hour. This is an hourly chart, so you can see this in European trade, and you can see how we backed up to the trend line today, which is really important. I mean, again, I'm going to
nice look.
Yeah, I'm going to take you back to ForexAnalytix so you guys can see. There's a tight triangle in the 101 to 103 range. Okay. And, we were talking about that yesterday, and this morning, why didn't that go out? Hold on. For some reason, my update, probably because I was half asleep. Oh, yeah, my update didn't go out. But if you were in the chat room, let me just take you over to the chat room this morning. So here's the ForexAnalytix chat room if you guys want to see the activity here from this morning. So for the last hour here, this is the chart we were pointing out, like, hey, there's gonna be some support down here, and that's gonna be a big breakout point. So as you can see, we've respected that really well. I think we need to be paying attention to that, because if you're a dollar bull, you've got to be just aware that the euro is actually holding in there, and it's holding some pretty key levels right now. Flip side is you've got the Aussie that's a little weaker today, and I think a lot of that has to do with we have a little bit of risk aversion as the S&P is starting to roll over. You can see the S&P is breaking through the wedge support that held all day yesterday. Now, I wouldn't get too bearish stocks just yet, but based on the development that we're getting here, technically, it does look like that we are at risk of a breakdown. So you have to think about how that will impact what you're trading. If you have a stock market that looks a little weaker, how's it going to affect the dollar, and some of the crosses. I mean, you're going to see some of the crosses outperform. You're going to see the dollar definitely outperform against certain currencies, and that you have to be paying attention to. Dale just pointed out about the Russell 2000, and that's the one chart that I must say looks a little bit better as far as stocks go. But you start looking at the other indices, like you've got the Dow here, which we made a higher high yesterday, very, very divergent relative strength. NASDAQ, similar. We made a new high, divergent relative strength, and now the NASDAQ looks vulnerable. And will it be enough to take down the IWM? My assumption would be, yeah. If you start to see the S&P, the NASDAQ, the Dow start to roll over, that is a concern. Then you have like the German DAX that rejected the 618 retracement last week. We couldn't make it past that. Now we're breaking an intraday trend line on the DAX. You also have the Nikkei, which is looking like we're rejecting here. And then you got probably the most important chart that Dale's been screaming about for the last couple of days is what, Dale?
The VIX.
Yep, the VIX. I was going to joke with you and say no, the Aussie New Zealand, but I'm joking about that. Yeah, the VIX. I mean, you've been hounding on the VIX, but look, it's holding support, and if the VIX isn't breaking down, then the risk is that the volatility might start ticking higher, and if that happens, it's going to definitely weigh on stocks. So I think it's going to be pretty important. I don't know if we're going to get a implosion of the market today. Because it is the day before CPI data. I think the CPI data is really going to weigh on the markets one way or the other. Whether it's I think it's still going to be a pretty hot data. I wouldn't be surprised if it came in line, with expectations. But I don't know if I'd bet against inflation data yet. But that's just me. I'm going to try to go in with an open mind tomorrow, but the inflation data is going to be the market mover. And if we don't, I told the ForexAnalytix community this as well. I'm going to tell you guys this: if we can't get a big move by like noon Eastern, then you've got to kind of step aside and just let the markets do its thing, because we're probably going to just consolidate between now and the CPI data tomorrow morning. That would be my assumption. So anyway, those are just some thoughts. What do you guys think going into CPI tomorrow? How's your feeling as far as inflation data goes? Stel, what are your thoughts here?
I'm going to repeat what I said yesterday. I think the risk is for a slight beat, but I don't disagree with the market pricing a small drop from last print. But as I said, if you put a gun to my head, I think it's going to be higher than expected, but I don't think it's going to be a big number either way in terms of where it comes compared to expectations.
All right.
So I don't have anything useful to say. Sorry.
Do you have any expectations for the CPI tomorrow, Dale?
I would fade strength if they got a good number.
Why?
Because I think we've either topped or we're topping.
That makes sense.
Because of the VIX.
Yeah. And you got the VIX, right? So if the data comes in hot and you see a big spike up in the dollar, and you see a big spike down in stocks, because that's what would happen. You'd see a big move lower in stocks. You'd be a buyer on the stock market on a dip tomorrow.
No. If it got good news and it tried to rally, I'd sell into the market. I'd also sell.
Okay.
Yeah. So if it's bad news, the VIX will perform. So I'm just going with some.
You think that? Well, let's say the data is hot. Right.
Okay.
If the data is hot, it's going to weaken the stock market.
Right. So you just stay. You got to go with it, I think, because there's plenty left. Or then you look for a spot on any bounce to get short and ride this thing to your blue line.
Okay. All right.
But the opportunistic thing is and I think it could come in lower than expected, maybe because of gasoline or something. Maybe it does, and that would be more ideal to sell the pop in the stock market, because I don't think we're going to go above 4,200, no matter how favorable it is.
Got it. I see what you're saying. So you'd favor actually selling strength in equities at this point.
Yeah.
Okay. All right. So you I mean, really tomorrow. You should hope for like a little bit weaker data. Like if we got some weaker data, the stock market's going to cheer that.
Yeah, maybe it'll go pop back to your wedge line.
Yeah, maybe. I mean, it'll be
like
interesting. I don't. And here I'm gonna zoom out a little bit in this chart. You guys can see how important this this 4100 level is. Actually, let's go over. I don't know. I'm on an hourly. I need to get over to a 4-hour chart. So you can see how important the 4100 level is and what a big pivot it's been for so many months actually. Big pivot in the market, and this last week was no exception. Actually, every dip to 4080 last week was bought, and so this week, if we break through 4080, I would not want to be long the S&P. I wouldn't want to be long risk. And I'm assuming if that happened, you would see a big spike up in volatility at that point. And that's where that VIX is really going to take hold.
And on your chart, I like the confluence of the breakout and the moving average coming in at that level, a little bit above 39.
Oh, down here?
Yeah.
That 200 period moving average is on the 4-hour chart. I actually care most about the 200-day moving average really on the daily chart because it's the 200-day. But yeah, I get what you're saying. It's down over here. Lot of confluences. It has been very supportive of the market on moves. Yeah. So Kman, do you have any thoughts about inflation going into tomorrow?
Yeah, I mean, when you look at the New York Fed report that came out yesterday, they are seeing the indicators starting to come off. So the market expects a bit of a slower number. Yeah, I don't know. If it surprises higher, anyway, in any case, if we get a big surprise, let's put it that way, if it comes in as expected, I'm not sure if I want to jump on anything straight away. But I think one of the biggest movers seeing the latest volatility will be dollar yen. If it comes in very hot, dollar yen will probably spike, and if it slows down, the 10-year yield might come back off again, and dollar yen come off with it. So I think dollar yen may be the biggest one of, in FX at least, the biggest mover on this one.
Hey guys, you know, the dollar yen is going to be has been one. I mean, you missed this this disaster that it's been the last few days because, well, first of all, we broke this channel. You know, we'd been monitoring that, and we broke below the channel, but we had zero follow through, and we came back, tested the underside of this channel, and as you can see. I'll pull it up in an hourly chart. You can see it. We've got a bit of a inverted head and shoulder pattern that people are trying to trade into. So you got this shoulder, head, shoulder, right? Now, wouldn't it be something if we don't follow through and we head lower again? It's really quite messy. I've kept my hands off the dollar yen because I just don't know what to make of it, but. Yeah,
you have US yields trading at this neckline, testing as a resistance.
Yep. Hey, Grega, how's it going?
Hey, I'm fine, thank you.
See you. Good to have you.
Yeah, that's the one we were. That's the line I was looking at this morning as well, around 134, 40, 50 there. That's going to be the first indication, holding or folding for the dollar yen. I think, and then top side around 136 should be important as well.
So let me ask you this, Kman, based on, you know, how you feel about, you know, and for those of you that don't know, Kman was on a trade desk for a large bank in Japan for many years, living in Japan. How do you feel about the yen here? I mean, would you be a seller of yen expecting a move back to 140, or are you more in the camp of I'm buying yen, I think we're going to drop back towards 130? I mean, because we are obviously right in the middle of that big range that I just gave you. I'm talking about a 140 to 130 range. So what do you think?
Yeah, if you put a gun to my head, I'd say we are going to probably visit the highs again before we break below 130. And I've been saying it like a couple of times when we were talking about the broader moves. That first of all, I think the 121, and then later on I said like, well, 130 should already come in bid, I think. For people trading the longer term, unless inflation drops away and the economy turns south and the yields collapse. I still think there is a fair chance to see this to see the yen weaker over time, especially that energy prices seem to find demand as well on dips or drops, but it's going to be volatile. I think it's going to be a volatile move, and whatever the finance ministry might say, the move is and will remain volatile for a while, I trust, especially now that we are entering the summer period, and don't forget at the end of the month, Jackson Hole, right?
Okay. Yeah, for sure. Hey, I know our time's up, and then we're gonna let Dale go into his interview. But Grega, do you have any counts? I mean, I can pull it up here on ForexAnalytix for those of you that don't know that we can follow Grega's Elliott wave counts on the yen. But do you have anything in particular you're looking for with the dollar yen and Elliott wave?
Yes, dollar yen. I think that we are now in a corrective rally, and I'm looking that if CPI data is going to be strong, the speculators may expect more hawkish Fed. So first push higher on the US dollar, but then again a recession risk could be back on the table, and the US dollar could again be sold off. If the CPI is slower, then it means that again the Fed may not be that aggressive with hikes either, and again the US dollar could be selling off. So I also see the US yields moving into this neckline resistance. We covered that last week a few times in the webinars, and at the same time, if we see US yields coming down, I think the dollar yen will stop at this 136, 138 area.
All right. Well, thank you, Grega, for your feedback there.
Thanks, Wizard.
Yeah, and Dale, we're going to give it to you so you can go into your interview. I just want to mention, everybody, thank you for being here every day, and make sure you try out ForexAnalytix so you can jump in our community as well. You can see how busy this is just over the last hour, and you can see there's a lot of chit chatting going on just over the last hour on a slow August Tuesday. So we'll see you in there. It's only $1 for 10 days. Come check us out. Dale, Stelios, Grega, and Kman, welcome back. Good to hear from you guys, and thanks for being here every day.
Thanks, guys.
Thank you, Dream Team. Thank you, guys. So stick around for our guest today, first-time guest, Blair Wheaton. If you have an interest in Gann and you have an interest in astronomical things, and Blair, I want to welcome you to F.A.C.E. Thank you very much for joining us today.
Yeah, hi there, Dale. Happy to be here. Thanks for inviting me.
Yeah, thanks for accepting the invitation. So you do have the ability to share your screen if Blake would stop sharing here. You just go down, there you go.
Awesome.
And, a picture speaks 1,000 words. And before we get into your work and what you do, maybe you could tell us a little bit about your history and how you got involved in the financial markets, and you could leave that up there if you want. Leave that.
Yeah, let me just rearrange my screen. It's a bit of a train wreck at the moment, but I mean, I've always had a passion for trading, and
Since when? Since when?
Oh God, I was a teenager.
Okay.
It was the crash of '87, and my social studies teacher had the radio on, and that's like my earliest memory. And I remember looking at like paper charts, going through these big books of paper charts. And
commodity perspective was one of
the. Well, this was stocks and that, and not so much.
Yeah.
Commodities.
Investors Business Daily. Yeah.
Yeah.
Anyway.
Yeah, absolutely. I'd read that in the school library. So yeah, I think like everyone here, we've got that passion for trading, right? So, and fast forward a few years, I'm just like Joe Retailer with a day job and that, and but I've got a bit of an entrepreneurial streak, and I happen to have some skills in the area of computer science. Got a computer science degree, and I've worked in IT for many years. So I happen to know a lot about software, and my trading is kind of like the average retailer, right? Kind of struggling in that, and I figured I'd put the extra time on my hands when the pandemic hit. I put that time on my hands into something a bit more productive. So that's kind of how time trades got born. And
are you still, yeah, broke up a little bit on me.
Okay, yeah.
All right, so there's your website, Blair, in case you weren't going to share anything. So, okay, the next question would be your evolution. I'm sure you started with, using a lot of indicators. What drew your attention to the planets and W.D. Gann, who said, if you don't learn how to change your mind, you won't have any change left?
Well, I was casting about for something that worked, right? And Gann was sort of next on the list. And as I learned more about it, I learned more. I wasn't attracted to the astrological part per se, but I was attracted to, certainly the level of success that he had. And to me, the astrology part, can be a little radioactive to people. So, it engenders some strong opinions. But the thing that I appreciate about astrology is that I really just look at it as an alternative calendar. I mean, I'm not an astrologer. I don't wake up every morning and, check my horoscope to help me make decisions every day. What I appreciate about it is that it can be an anchor point for cycles that extend into the future. Okay, so I finally got my screen cleared up here. I'm going to share my screen and give you guys a bit of a tour.
Okay, there you go. I stopped sharing.
Thanks, Dale. All right. Okay, so I mean, I don't trade Forex personally, but you guys were trading the dollar yen, or talking about the dollar yen, and talking about what's going to happen next. And one of the things I did with time trades is I wanted a visualization that would extend into the future. Okay, so time trades is really a big association engine. Okay. So it finds key points in the past, like big moves down and pivot lows, and it associates those with what's happening in the sky at that time. Okay. It's time trades is tracking almost 1,700 data points about the state of the sky for every single day. Okay. And it combines that with stock behavior, and then it projects that into the future. Okay. So you can see here on the chart, the green bars are the probability of a 2 standard deviation move up over 5 days. Okay. Red bars are probability of a 2 standard deviation move down over 5 days. Okay. So
interesting.
The probabilities here in the past have been trained on actual price data. That's why they look so good. Okay. Everything in the past was trained last night. So these match with price action. And what happens with that is I generate something called a machine learning model, and that machine learning model can be used to project those same cycles into the future. Okay.
Okay, so why don't we stick with the yen and tell us what it's projecting? So it's a blue vertical bars, so you'd be expecting some upside here over the next several days, right?
Right. So yeah, just ignore the blue vertical bars on the chart for the minute, but the probability of upside on the next few days is really coming from the green ones down here in the swim lane. So that's showing the probability of a
you mean the vol? Oh, I see. So those green are, I was thinking it was volume, but it's another tool. What do you call that? Those green bars, just where the market is in a important inflection point type of position.
So these are the calculated probabilities from the machine learning. So the world does not need a new charting tool. So I didn't, build time trades to be, a competitor to TradingView or MetaTrader, or any of those great things, right? Those things are mature and amazing. And time trades integrates with TradingView. We've got a way to get some of the time trades data into TradingView, but this is a custom visualization that is designed to reflect the machine learning that's generated. That's really what time trades is about. It's really about, sort of training these models using ideas from Gann and ideas from astrologers and some ideas of my own, and training these predictive models and then forecasting them into the future. So I needed a visualization that would extend past the right side of the chart. And there's 4 data points that we're tracking. Okay. So the bottom swim lane here, the blue bars, is the probability of a pivot low. Okay. Green bars, probability of a move up. Actually, specifically, it's probability of a 2 standard deviation move up over the last 5 days. Red is same thing, but down, probability of a 2 standard deviation move down over 5 days. And then yellow up here at the top is probability of a pivot high. So, as you guys were speaking and doing your analysis on dollar yen, I've got no intuition about Forex. I don't trade Forex. And I was curious what the time trades forecast was for it. And it basically calls for continued move up. We've got a pivot high forecast August 15th. Now, don't take these dates literally, wrap a couple days of error bars around them, right? It's all probabilities, you get that.
Right.
But the degree of alignment between your expert analysis and the time trades machine learning was surprisingly good. And then after that, we see declining probabilities of a move up, and then we start to see probabilities of a move down increase, and we've got like 0 probability of a move up over here the week of the 23rd to the 30th. So
interesting.
Pretty strong alignment actually with what you guys saw on the chart, talked about on the chart. A few more days push up, a little bit of weakness right around 136, 135. And then it looks like a few days to roll over.
Okay, so that's interesting, and this was all spit out by your program.
Exactly, yeah. And I think one of the big value points of time trades is speed of analysis, right? Like I brought this up. I didn't have to sit and draw lines on my chart for a couple hours to come up with this opinion, right?
Right.
So we can go and take a look at stocks. So we can take a look at spiders. And this is all end of day data, okay? So this does not show any intraday data, all right? So spiders is showing a pivot low and declining probabilities of move up right around these 2 blue bars. So that's kind of reflecting, I think, a little bit what we're seeing in the market. Maybe
a little pullback for it has a time window to pull back in that blue box that you're showing right there, because at the bottom there's not much there for a low. Is that what you're saying?
That's exactly what I'm saying. So I like to correlate. I don't like to look at just one index, and because time trade is so quick to take a look at these things and build an opinion, we can go and check out, the diamonds, the diamonds showing a little bit more red, right?
Yeah.
So what you want to look for when you're interpreting these things is, an increasing probability of moves up, right? Or if you're bullish, or an increasing probability of moves down. What you don't want to be is you don't want to go long on the backside of one of these clusters, right? As the probabilities are going down. So there's a little bit of interpretation needed to get the most from these charts.
Okay. And can you use these, like right now, say I was a real long-term trader, and I was a bull. I would be waiting until it looks like when sometime in October is where things start to look a little bit more bullish.
A little bit, yeah. You know, the quick way that I like to use these is just to scan for the big pivots, right?
And let me ask you this, and then I do interrupt people sometimes. I see on June 13th, you had all those blue bars at the bottom, and the low was actually right around the solstice, wasn't it the 16th or something like that? So did you have those blue bars showing up before we got there?
So that's a great question. That's a feature that I want to add into time trades because I keep the history. I update the forecast every single night, and I've got all those files in there. So that's a feature I want to add. It's like a little time machine.
So they weren't there giving you that window in late June until after the fact?
I can't tell you if they were not. They may be. I do this sometimes on my own development system to check. But this is like, I want to be totally transparent with the data that's being generated, and I want to add that feature that's been on the to-do list for a while.
Okay. Okay.
Yeah.
Anything
but
else
I think
you
you're
want to
touching on an important point, Dale. If I could interject,
please,
which is the probabilities change, right?
Yes.
You know, it's like
it's a process.
Absolutely, it's like your opinion of the market, my opinion of the market. It changes day to day. We get new information. We get new price data. In the case of the machine learning here, we get new price data. It may be, you know, a big push up like here, and it creates a new association with a new bit of astrology data, or it may create a new pivot low, like some little wick lower, and hey, there's a new pivot low, and we can anchor some cycles to it. So the probabilities do change. And, you know, this is something that, you know, it's important that people understand that, hey, just because this is a fancy computer thing with machine learning, you know, it's definitely not always right. It's far from that, right? You know, we're showing probabilities. Trading is always probabilistic, and these things can and do change.
Okay. All right. And anything else you wanted to show us? It's interesting to me. I'd have to, it seems like it's a type of thing where you'd have to play with it for a while to know if it would work for you. Or you have to learn. You have a learning curve with this, right?
There, 100%, Dale. There's totally a learning curve here, and I
think it's fascinating, you know, because you know, I think a lot of people want to understand Gann, and then they look at the wheel, like myself, and go, "What the hell?" You know,
yeah,
right?
Yeah. And that's true of pretty much all of financial astrology. And, you know, that was one of the things, that was one of the goals of time trades, was to make that simple, make that more approachable. And, you know, I'm using the power of modern technology and this machine learning stuff to boil all of these factors down into 4 simple probabilities every day, right? And people can wrap their head around that. So the last thing I want to show is, you know, we're showing here the probabilities of moves up, moves down for one symbol. Okay, there's 900 symbols that I track and update.
It's a big universe.
It is a big universe, but you know where I'm going with this is we can go over here to the models page, and this is basically a screener. Okay, so if you're interested in Forex, whoops, I've got it in here as currencies.
Oh, these our community trades everything.
Right. Okay. Cool. So we'll just drill down on currencies for now. So we're showing, we can filter on that, And let's say your time frame is, I don't know, 15 trading days. Okay. And, you know, you just want to quickly find which of these have the highest probabilities of a move up in the next 15 trading days. So this is the mean, the average of those probabilities over the next 15 trading days. And then you can do the same for moves down, and you can see it's the Swiss yen, right? So you can very quickly find some of the biggest opportunities. And I was using this the other day, and I found a very clean chart on, if we go into US, this is how I find stocks. What was I looking at? I think it was 10 days or something. And I was just scanning through this list here, and I found XLU. Now, maybe it was 15 trading days.
Utilities, XLU?
Exactly. It was utilities XLU. So it was popping up on this list here.
I saw it on your last page at the bottom.
Yeah. Oh, okay. So it was there. Yeah. So, you know, there's 900 symbols here, and you can, if you want to, you can scan through all 900, but no one wants to do that. You just want to say, okay, find me the ones with the highest probability of a move down. And there's XLU. So you can click on that guy, and then you can see a really clean chart here. Now, what's nice about this is it's got the, it's got to move up.
Space.
And you can see it's
got space in red, space below and red above.
Exactly. There's clusters. You want to look for clusters and not like isolated single points. So this is definitely one worth further analysis. So, I think the time efficiency of this, just as a first pass, right? I'm not saying like go and buy this because
at the farm on anything, no matter what the tool is.
Yeah, absolutely. But, as analysts, our time is valuable, right? And if we can cover more symbols in less time, that's a win. So that's one of the big benefits here of time trades.
Okay. It's really fascinating. And so you're a coder. How do you learn how to do all this, to put this model together? Were you able to do it on your own? Did you have to hire people? Was it your background or you're self-taught to be able to put this kind of software together?
Yeah, so my background's in computer science, so
that's right.
I'm kind of fearless when it comes to trying stuff like this.
Yeah.
Certainly there was a learning curve, right? Right. But the thing that I find, Dale, is that there's so much great knowledge out there, and it's trapped in books and crappy websites. And I kind of look at time trades as a giant blender to take all of these great ideas, sprinkle a bit of modern tech on top of it, and incorporate it into these probabilities. I've got ideas from, not just Gann, but other authors, Connie Brown, Larry Pesavento, Patrick McCullough, and others. And these are all folks who've written books, and books are great. You read the book and you get an idea and you put it down, and then you struggle to, turn it into execution, right? Because it's not integrated into your tooling. So I test the ideas from these books. I confirm that it improves accuracy, and then I include the ideas that work in time trades.
Well, you know what? I'd like to thank Inside the Candle for recommending you, Blair, and really fascinating tool that you've developed on your own. Congratulations. If people want to learn more about it, I know they could follow you on Twitter at TimeTrades1. You have a website that they could go to well, yeah, I showed it earlier. What's the best way to reach you?
Yeah, Twitter usually, or time-trades.com is the website.
Okay.
So yeah.
So do you have different packages that you offer for this or?
Yeah,
Okay.
it's pretty simple. Yeah, there's a 7-day free trial. It's $30 a month if you want to go monthly, and $270 a year.
Okay.
Yeah. And it also includes TradingView integration as well. So there's TradingView scripts that include some of what's seen on the chart here, and it also includes this thing called magic levels, which is ironically probably my favorite discovery. It's got nothing to do with time, but it's a combination of Fibonacci levels and Pythagorean levels, and they're eerily accurate. So reach out to me at Twitter, TimeTrades1, or check out the website.
Whoever made this cosmos was a mathematician, don't you think, Blair?
There is an elegant harmony to it, that's for sure.
And really, interesting product for people that really don't have the time to, to learn a whole new methodology, but have an understanding that time and price, and at time is the art of it. It's not the if, it's a when, isn't it? So glad that you came. Appreciate it, and rooting for you. Keep in touch, and maybe next time we can get together and you could line up some examples that might be actionable for the community, maybe intermediate term, see where we're at in the fall. I think we're going to have an interesting fall season with the elections and cycle wise. So you're now my trading warrior brother, Blair.
Great. Thanks, Dale.
Yes.
Do we have a couple minutes? Do we have a minute or two to answer Tony's question?
Oh, yeah, sure we do. Yeah,
okay.
Go ahead.
Okay, cool. So I'm going to share my screen. Tony asked, today is an inflection for NASDAQ. Can you try NASDAQ? We can test his predictions this week.
Oh, yeah.
Let's, is my screen sharing back on?
Yeah, you're okay. There. You still have the utilities up. There's the cues.
All right. So like a lot of things on time trades, it's not like it's kind of like shades of gray, right? Sorry?
Sometimes things will be inconclusive, right?
Absolutely. Sometimes things will be inconclusive. There will be some cross currents, and you know what? It's best just to move on to the next chart, right? But you can cut and run really fast with this. So
we're on the blue line today, right?
Yeah, we're right. We were on the blue line yesterday, and the blue line is a timing indicator that I discovered. It's basically halfway between eclipses. And eclipses are interesting. If you're curious about the power of eclipses, just look at Bitcoin and overline the two recent eclipses, the last two eclipses.
Solar or lunar?
Both. So I'm looking at eclipse season, right? Like the 2 weeks around them, right? And if you just put the 2 weeks around solar and lunar eclipses and slap that on a Bitcoin chart, then you'll see the last two major flushes have been important. So the teal lines here are midway between eclipses, okay? And often these align with major pivots, okay? And you can kind of see that here. And this is an example of where we have some cross currents, right? We've got some down pressure coming into a pivot low on August 16th. And then there's another pivot low, August 22. And there's, but then the down pressure continues down, right? So this is an area where, honestly, I will override the probabilities a little bit in my head if they're not, if it's not fitting with the other things that I'm seeing in the market, like other indexes or bonds. So when it comes to NASDAQ, I'm kind of short-term bull and long-term bear. I actually think that, and I talked about this on our video last week, I believe that we are going to see a pullback here for a few days, but ultimately, sometimes these forecasts, they do invert, right? And what happens is
like the Bradley model.
Yeah, exactly, like the Bradley model. And the Bradley model is a great, manual example of what time trades is doing. Time trades is just doing it at scale with a lot more data.
Should I, Blair, should I keep paying attention to planetary oppositions?
Yes, you should.
You find them important?
They are absolutely important. They're in the model.
Okay.
Like I've got planetary oppositions in both. So absolutely, they're in the model, and maybe we can do this on the next call, but we can go and explore under this influencers button. This will tell you what actually is the most important of the 1,700 data points that are going into these. But remember, basically, there's two aspects to these forecasts. One is probability, and the second is direction. Okay, so what I've learned about time trades is when it's wrong, it's 180 degrees wrong. So this model might actually fit a little better if these moves down invert, right, and become a move up. So this is why you always got to combine price action with time trades, and you can look at these time periods as, hey, these are periods of big energy in the market where there can be significant moves. And then you can let price sort of dictate what the actual move is for you. So
it's a tool that you use, but you still are a discretionary trader. It's not mechanical.
Oh, 100%. Yeah. You can't just literally take this. You still, and this is why it's positioned as an add-on to your existing system, right? So that's how I position it and market it.
Okay. Well, again, thank you for explaining that. You're getting a lot of good feedback, Blair, and rooting for you, and may you end up with 10,000 subscribers by the end of the year.
Thanks so much, Dale. Appreciate it.
You like that? Reasonable goal? Why not think big, huh? Think big, buddy.
Love it, man. Love it.
All right. Anyway, Blair Wheaton, everybody. You could find him on Twitter at TimeTrade1, the number 1. Thank you very much, Blair. Have a great day, and I'll get a hold of you on Twitter to have you back.
Cheers. Thanks, Dale.
All right. That's it, everyone. You could join the team in 13 minutes for the morning edge. You're welcome, Kareem, Anthony. He was a great find. Twitter's great. I found a lot of hidden gems out there. So everyone have a great day trading. Remember, don't just count. I think we have a super moon, the 11th. Don't just count the planets, count your blessings. See everyone tomorrow.